Hi and welcome to the video. In this video, I will explain the concept and accounting for recovery indicator manipulation rule, which is used in joint venture accounting, mainly in allocation and settlement process. So let's continue with the video. Now, the recovery indicator manipulation rules allow you to define the rules that indicate how recovery indicator for the sender and receiver should be determined, resulting from the allocation or settlement process in joint venture accounting. Also note, these recovery indicator manipulation rules are pre-configured in SAP system, and it is recommended to use these standard recovery indicator manipulation rule. But if you want, you can configure it as per your requirement in the SPRO. So I'll show you the configuration part later in the configuration video. Now here is the business case for the recovery indicator manipulation rule. The company wants to distribute the cost of 20,000, which is posted as a non-billable expenditure, from the corporate cost center to the receiver WBS of the joint venture at 60 and 40% to WBS F1 and WBS F2 respectively. Also, the company required this cost to be received by the WBS as the billable expenditure, so that later it will be processed by the cutback transaction and will be distributed between the operator and the JV partner as per their equity share that is maintained in the joint operating agreement. Now here we use the recovery indicator manipulation rule, which is assigned in the joint venture CO allocation cycle, which contains the field for the recovery indicator manipulation rule. In SAP S/4HANA, you can also use the universal allocation as it also contains the recovery indicator manipulation rule. So this recovery indicator manipulation rule is configured at the back end, and I'll discuss the configuration part later in the configuration video. Now we are using the recovery indicator manipulation rule M002, which is assigned in the JVA CO allocation cycle, and it controls the recovery indicator for the allocation, so that when the allocation is executed, the sender will receive the credit amount with indicator NC, which is same like non-billable. As you can see in the figure that 8,000 and 12,000 is credited on the sender with the recovery indicator NC. So this recovery indicator is same like non-billable, means that it cannot be processed by the cutback transaction. Now the debit entry, which is posted on the receiver's WBS, you can see in the figure also that this debit entry is posted with the indicator BC, which is just like a billable indicator, means whenever the cutback is executed, this amount posted with the BC indicator to the WBS F1 and F2 will be processed by the cutback transaction and distributed between the operator and the joint venture partner as per their equity share. Thank you for watching the video. Hope you found it informative. In my next video, I will perform the JVA allocation process on the SAP S/4HANA system. So stay connected and subscribe the channel for the upcoming or latest video. Till then, goodbye and happy SAP learning.